New reporting from The Intercept's Ken Klippenstein revealed at least 3 of California Governor Gavin Newsom's wine companies are held by Silicon Valley Bank. An SVB Bank president sits on the board of California Governor's charity. This information comes to light after Newsom praised the SVB bailout. Here to break down this reporting with us is The Intercept's Ken Klippenstein. Welcome back.
Hey guys, good to be with you.
Okay, help us understand the relevance here. You know, Gavin Newsom has become a controversial figure, someone who's been a stand-in for kind of liberal hypocrisy ever since he was shown having this fabulous dinner in the middle of COVID after advancing these kind of COVID policies that were rather restrict on the rest of the population. And now he has his association with SVB Bank, which has collapsed and been bailed out, not bailed out in kind of terrific and very quick fashion, which to other people demonstrates how willing the government is to step in and save people who are of the more affluent classes as compared to the rest of us. So what should we take from this apparent kind of conflict of interest between the governor having these wine companies that are held by SVB and the alacrity with which the government seems to have stepped in and bailed out these figures?
Well, before becoming governor, Newsom was a business owner, a big-time business owner. He owned a bunch of different wineries, more than just the 3 doing business with this bank. He also owns a liquor store, restaurants, big presence in the hospitality industry. What's always struck me about him that's kind of funny is he's sort of a mirror image of Trump, not just in terms of being a businessman turned politician, but also if you look at the local California press, it has been reported for a number of years now, these conflicts of interest that exist in the form of also his wife owning a foundation that's received $100,000 from Silicon Valley Bank. And so a lot of the same questions that we saw Trump have to face in 2017 when he first came into office, you know, how are you going to distance yourself from these businesses? And in fact, Governor Newsom pursued basically the same line. He ended up establishing a blind trust, which quickly came under criticism because the person that runs that blind trust is his sister. And so the question is, you know, is that a meaningfully blind trust?
It's a one-eye open trust.
Trump, right, exactly, yeah, the winking trust. But much as Trump put his son in charge of his businesses with the blind trust that he had.
Gosh, it's just so, you know, he doesn't have one wine company, not 2 wine companies, but 3 of his wine companies invested in SVB. It's just such a perfect encapsulation of like the exact caricature of the kind of person getting this bailout. And in fact, the Washington Free Beacon has reported that Newsom not only had these ties to SVB, but directly stepped in to help convince President Biden to bail out the bank last week. Ken, what is your reaction to this reporting?
Yeah, it's hard to read any other way when he put out a public statement saying that Newsom was in close touch with not just the Treasury Department, but also the White House running up to that intervention on the part of Treasury and the FDIC. So, you know, it seems pretty clear what happened. And I do think that there's a sort of, you know, I quote an economist, Dean Baker, in the story saying there's a class context to all of this because we were just coming out of a, you know, very vigorous debate about student loan debt cancellation that ended up getting, you know, overturned, blocked in the courts. And now we have a situation where there's, you know, essentially debt cancellation for people that had over the amount insured by the FDIC, the federal body that makes sure that in the event of a bank run, depositors will be able to get their money back. Anyone with over $250,000 in that bank is going to be able to access those funds still. And you look at $250,000, what kind of people are that? Well, these are not your salt of the earth, everyday Americans that have over $250,000 in a bank. These are going to be, you know, venture capital kind of groups. I
mean, quite literally, this is a bank that attracted venture capitals to it because apparently it offered various kinds of other kind of financial packages and financial instruments to people who banked with this bank. So these are not just your average depositor to begin with. Moreover, I think it's important to drill down on this context. We decided as a society that to protect the ordinary American, the deposits up to $250,000 should be federally insured. No matter what, the government's got your back. If there's a run on the bank, your first $250,000 is good. over that, it's your own risk if you want to keep your money sitting in the bank. And people who are savvy investors, they put $250,000 and sprinkle it among a bunch of banks. We've got a lot of banks here in America. That's an option. You can invest it. You can do other kinds of things. But that's a certain kind of risk assessment that individuals make. Now, when it comes to the student debt context, which you just brought up, I think rightly so, people look at these small amounts that are being canceled, $10,000 to $20,000 max for the poorest students in the country. And they say, one, that's a bridge too far. And two, they say, well, these students made a gamble. They made these decisions. If it didn't work out for them, if their basket weaving major didn't pan out, then that's on them. But what about the decisions that are being made by these relatively sophisticated financial people like Gavin Newsom, who have made a decision to keep large amounts of money over the insurable amount in banks when they have the opportunities to do otherwise? And why does it seem to be so easy for the government to step in to save their backs while there's so much public conversation and pushback about any kind of redistributional policy that happens to affect poorer people in this country? I mean, is there any rationale here that you think holds water for why it is good for the government to have bailed out this population but not, say, homeowners after 2008 or college students now?
Well, so the argument is that there's systemic risk. There's risk of contagion, which means that the bank runs can then affect other banks, and then you could have a much bigger systemic situation that we saw in 2008 and 2009. But, in that case, why did the banks get into these kind of businesses to begin with? If you look, and I mentioned this in the story, back in 2018, these same banks were using lobbyists, two of them coming from the Republican Speaker of the House, Kevin McCarthy, to advance their interests and try to undermine the Dodd-Frank reform bill that contained within it a number of measures that might have prevented something like this from happening. So, not only is this happening to these banks orchestrated the kind of conditions that would allow for this to happen and now are being rewarded for it by getting bailed out. And so, you mentioned being able to put your money in other banks to be able to avoid these kind of things. You can also buy depositors insurance. That's something that exists. And so we have one story being told, these kids are not responsible to have applied for schools that they should have gone to. In the other situation, you have, big systemic financial interests doing these things without considering any of the risks, despite having a number of other options. And so you're really rewarding the worst behaviors of these things. And it seems like there's no strings attached to this kind of, let's call it what it is, a bailout. Because, I haven't heard any talk about, we're gonna reinstate some of the parts of Dodd-Frank that we repealed. So the question is, what is going to happen to make it so that this doesn't take place again, even if you assume that they had to be bailed out to protect from the systemic risk?
Yeah, I was one of the people who's sort of against the student loan forgiveness. I felt like it was not fair to working class Americans. But my God, like in this context, to see people pushing for this bailout when they wanted to deny a measly $10,000 to people, it's really, really, really appalling. And I would say there's even another comparison I would make, which is how the Fed has been raising interest rates consistently to fight inflation. My radar is about this, which of course hurts the working class. They want to see wage growth stop. They want to see people get unemployed. They want to see investment stop. And of course, it makes first-time home buying completely impossible. I mean, mortgage rates now 6%, 7%, 8%, right? They're throwing a bomb on the pathway to the middle class, right? That was their idea for how to stop inflation. Meanwhile, suddenly you have all of these businesses that are potentially going to close, billions of dollars no longer part of the economy because of this run on banks. What better way to cure inflation? But instead, because it's the elites of the Democratic Party, they have to run in and save them and protect them, because protecting these millionaires is protecting the economy. I mean, I cannot get past the fundamental injustice of that comparison.
Yeah, you raise a really important point. So the Fed interest rate hikes had the effect of making bond investments that this bank had engaged in really risky. And so really the driving factor, I mean, there's the lack of banking regulations on the one hand, and then there's the conduct of the Fed that's driving this and is probably going to cause more of these kinds of things to happen. What's interesting is you look at someone like former Treasury Secretary Larry Summers saying we need to make unemployment go up, basically saying exactly that. Mm-hmm. And now we have a situation in which, well, here's all these venture capital people that could be unemployed because of the decisions they made. What happened to your commitment to unemployment going up? It sounds like you only want unemployment to go up among certain classes and not other classes.
Yeah, and it's worth noting that it's not just, unfortunately, it's not just left-leaning Democratic elites. It is across the spectrum. This really is an elite issue. You have people like David Sachs who are very much loudly calling for this kind of thing, people who have given both to Gavin Newsom and to Republicans, because over and over again, when we look at these kinds of instances, it's that money talks and the politics follow. So we really appreciate you joining us today, Ken, to shed some light on this.
Thanks for having me, guys.
And we'll have more Rising for you right after this.